Hello everyone and welcome back to the channel where we dive deep into the fascinating world of hard to borrow stocks and potential short squeeze setups. Today, we're putting a unique microcap under the microscope, NCT. We'll break down why it landed on our screener, what its current metrics mean, and what you need to understand about its unique situation. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Alright, let's talk NCT. This is a microcap company with its sector currently listed as N/A, which can sometimes indicate a company undergoing significant changes or one not easily categorized. Our hard-to-borrow screener flagged NCT due to some truly eye-popping metrics. While we always emphasize that high borrow fees don't guarantee a squeeze, they certainly grab our attention, and NCT is some of the most extreme numbers we've seen in a while. What is cost to borrow and why it matters? So, what exactly is cost to borrow and why should you care? Show animation, short selling process. When you want to short sell a stock, you first need to borrow shares from a broker. The cost to borrow, or CTB, is an annualized fee you pay for the privilege of holding those borrowed shares. Think of it like interest on a loan. When many short sellers want to borrow shares of a particular stock and the supply of shares available to lend is low, the fee skyrockets. Why can it exceed 100%? Because it's driven by supply and demand. If demand to short is high and supply is scarce, the market will dictate an extremely high price to borrow, far surpassing typical interest rates. This high fee signifies that a stock is hard to borrow. Why the stock is hard to borrow right now? Now, let's get specific with NCT. Our data shows an annualized cost to borrow fee currently sitting at an astounding 677.5%. This is an extremely high number and clearly indicates NCT is a very difficult stock to short right now. We also note a very small estimated float of just 0.3 million shares. A small float means fewer shares are actively trading on the open market, making it easier for short interest to build up and for demand to outstrip supply when it comes to borrowing. However, it's critical to note NCT current trading activity. Today's volume and the 30-day average volume are both reported as 0 shares. The price action, unsurprisingly, reflects this with plus 0.0% changes across all timeframes. This extreme liquidity means there's virtually no active market for NCT right now, presenting a unique situation where high CTB exists without active trading volume. Our internal composite squeeze score for NCT is 42.5. Squeeze mechanics explained. For our newer viewers, let's quickly explain the short squeeze mechanics. Show animation short squeeze. Short sellers borrow shares and sell them, hoping to buy them back later at a low price to profit. But if the stock price starts to rise, driven by buying pressure or positive news, these short sellers face increasing losses and, crucially, rising borrow fees like NCT 677.5%. At some point, the pain becomes too great, and they are forced to buy back shares to close their positions. This covering creates more buying pressure, which pushes the price even higher, triggering more short sellers to cover, and creating a cascade known as a short squeeze. A small float, like NCT 0.3 million shares, can amplify this effect because there are few shares available for short sellers to buy back to cover their positions. Dilution risk check. One of the biggest threats to any short squeeze thesis is dilution. Dilution occurs when a company issues new shares, increasing the total number of shares outstanding. This influx of new shares can provide short sellers with an easy way to cover their positions, satisfy borrowed demand, and effectively negate any upward price pressure from a squeeze, even if cost to borrow is high. So, what about NCT? We've checked for recent diluted SEC filings such as -1s, -3s, or 424BS in the last 90 days, and found no evidence of any. This is a positive sign for any potential squeeze scenario, as it suggests the company hasn't recently created an avenue for significant new share supply. We also found no recent reverse splits for NCT in our look-back window. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Given NCT extreme cost to borrow 677.5% and tiny float, the borrow metrics are undeniably screaming hard to borrow. However, the complete lack of trading volume over the last 30 days and today means this is a very unique situation. While high CTB indicates strong conviction from short sellers or extreme scarcity, zero volume means there's no active market to drive price movement, short covering, or really any trading at all. A high CTB does not guarantee a squeeze. It could simply mean short sellers have a very strong conviction in their bearish thesis and are willing to pay a premium to stay short, especially if the stock is illiquid or dormant. For NCT, if any trading activity were to resume, indicators like an uptick in volume, significant price movement, and any reduction in available shares to borrow would be key. Without volume, price action is effectively frozen. NCT presents a fascinating, albeit dormant, case with an incredibly high cost to borrow and an extremely low float. While the barometrics are off the charts, the absence of any trading volume means we're in uncharted territory for a typical squeeze setup. As always, do your own due diligence, understand the risks, especially with microcaps and illiquid stocks, and never invest more than you can afford to lose. If you found this breakdown helpful, please hit that like button, subscribe for more in-depth analyses, and let us know in the comments what other stocks you'd like us to investigate. Thanks for watching, and we'll see you next time.